What's up guys, Ben here and welcome to Motivation to Invest. Today I'll be chatting with a great millennial investor. His name is Ray and he's got a portfolio of over £100,000. So how did he do it? Well, in this video we're going to find out. Let's dive in. So here we are with Ray.
Hi guys.
The man with the £100,000 portfolio. How are you doing? You okay?
Yeah, very well, thank you.
Good.
Yeah,
very
good.
You've got a passion for investing in stocks.
Yeah.
How long have you been doing that for?
Yeah, so Ben, I've been in investing for a number of years. So first initially started around 2016.
Okay.
And sort of gradually built myself like a larger portfolio over the time, adding to certain positions and certain sectors which I've found a real interest in.
Yeah. So what capital did you start with?
Yeah. Initially, I was working for a corporation.
Yeah.
So I would take part of the salary and allocate it to different sectors which I had a real interest in, whether that was in real estate, in the consumer businesses, in more cyclical stocks as well.
Yeah.
So it all started with just depositing smaller chunks into kind of like a brokerage account, and then building those positions gradually as the years progress.
What was your first bit you put in? You put like 5,000 and 10,000, 1,000?
Initially what I put in was, I believe, around £500 to £1,000. So
500. So you started off very small,
Yeah.
and you grew it all the way to over £100,000.
Yeah.
Wow, that's incredible. That's incredible. So you must be doing something right.
Yeah, well, I try, yeah.
Yeah. So what got you into investing?
So as I was growing up, coming from a very hard-working family, we've always had that strong work ethic. So one of my passions was into sort of real estate, and finding out that I could own a partnership of a residential company, like a real estate company, was investing into stocks and shares. So that was partly why.
So your family's sort of very, like, they've got good work ethic and they encourage you to invest.
They were more in towards the real estate sector. So that was one of the passions on what kind of attracted me to that. To the investment.
Who
world.
in your family does that?
My dad.
Your dad does that, so he's really into that. Is that just in the UK or is that abroad? Where?
Yeah. So in the UK and overseas as well.
Okay.
Yeah, in China.
Great stuff. And who has been your inspiration with investing?
Yeah, so there's a few inspirations of mine. So there's the famous Warren Buffett. He's an inspiration to all of us. And so I follow his investing approach. His and Benjamin Graham's investing approach on sort of dollar cost averaging, finding a fundamentally strong company, which is sort of undervalued as well, and really averaging in on that position as well.
We've got his book here actually.
Yeah.
Intelligent Investor, Benjamin Graham. I did a brief review on this, so you can check that out on the link below.
A couple of other sort of inspirations is sort of Jim Rogers. Jim Rogers is the American sort of, he was like a commentator, but he's sort of very well diversified into the international, different international businesses and different segments all across the world, which I kind of like to follow his
Okay, Jim Rogers. I need to look into him.
Jim Rogers. He's sort of based in Singapore.
So is he more diversified person, or is he more like invest in a few stocks?
Yeah, so I kind of like his investing approach into not just into equity securities, but more commodities as well.
Okay.
And he's very well diversified across the broad range of different countries. Not just the US Nasdaq market, but also he invests a lot into the Japanese market, which is very much down at the moment.
So do you have good exposure to? Are you invested into Asia and those countries?
I do take an interest in it, but at the moment my portfolio is allocated to more the US
sector,
which is the most thriving.
So what are your investing goals?
Yeah, so I want to grow my portfolio from 100k right to £1 million portfolio, but using it sort of with a 20% growth rate.
Okay. Yeah. So that's achievable.
Yeah.
So what we'll do, I'll dive into this compound interest calculator and we'll see exactly the percentage you'll need in order to achieve $1 million on your portfolio. Right guys, so here we are on the compound interest calculator. So £100,000 to start at a 25% compounded rate over a period of 10 years, and you'd have nearly £1 million. Now, the interesting thing about this is the equation for growing your wealth is heavily dependent upon time. So if I increase this to 15 years and decrease this to say 20%, let's see what we get now. We get over £1.5 million over 15 years at just 20%. So even if you manage to achieve a 15% return, well, you got £800,000. So time is an incredibly powerful thing when it comes to compound interest. What's your daily routine and habits?
Yeah, so at the moment I was reading the Robin Sharma's book. It was the 5 a.m. Club.
Okay.
That was given to me by a friend, and I've really started to really apply those principles of waking up really early, before sunrise, and at 5 and 6 a.m.
Okay.
And then that really giving myself a lot of preparation time in terms of analysing which companies, doing stock research, looking at any sort of passive income streams, and also working on business revenues as well.
So do you find waking up earlier you can get more done?
Yeah, so waking up early, it just gives you that advantage while everyone else is asleep. So having those 2-3 hours in the morning, you can get a lot of things done.
A little bit of extra time.
Everyone has a problem with time, but the day has 24 hours and we sleep 6. Now, I know there's some out there that say, whoa, I need 8. Well, I say just sleep a little faster. Because the bottom line is we have 6 hours of sleep, 24 hours are available, so you have 18 hours now available to do your work, your family, your hobbies, and also to learn something new or to do something new, which could easily be that you want to learn a new language, or that you want to read as a New Year's resolution, I have to read a book every week, or you say, I'm gonna go and reshape my body.
Like exercising, meditation, mindfulness, yoga, doing all of that body healing for yourself, and then really preparing yourself in the mind, ready to start your day, ready to run the business, and also looking at what stocks you have on your list, that are gonna, which ones you're gonna buy, which ones you're gonna sell, which ones for trading as well.
Yeah, no, that's great. That's very similar to the routine I've got, and I try to wake up around 6:30. I do yoga in the morning. I do meditation 4 times a week, 3-4 times a week, just to clear my mind. And I find I also use a productivity principle called MIT, most important task. So every single day I'll have my MIT. What is my most important task? What is the task which is going to move the needle the maximum amount to help me to reach my goals? And every day I just do that task.
Where was what's the MIT sort of philosophy? Like, who was it by a certain?
Yeah, it's in a book called Eat the Frog, actually, by I think it's Brian Tracy.
Okay.
And he basically says your most difficult task is imagine it's like a frog. And what most people do psychologically is they'll put off the most difficult task. They'll put off the most important task, the task that in their brain they know they need to do to reach their goals. They'll put it off to the last minute and procrastinate. Yeah. So what he suggests is embrace that goal, attack it first thing in the morning, complete it, and then the rest of the stuff you do throughout the day, that's not going to help you as much towards your goal, so do that most important one first. And it goes a bit back to the 80-20 rule. So 20% of what you do can get 80% of the results. So it's identifying what is that 20% which is most productive. So they use it in a lot of philosophy. It's in sales, business, investing, even in the gym. You'll notice certain exercises you only have to do 20% to reach your certain goals, even in diets and everything else. So this is the part everyone's been waiting for. Let's dive in to your portfolio. This is your portfolio. Currently at 94,462. Of course, due to the recent, obviously, market crash, it's still at a very, very good level. You can see you've got an. Is that your top position there, Tesla? Is that your largest position?
Tesla's top performing position.
Yeah, and you're up by over 444%.
Yeah.
Wow. Wow, that's incredible. That is a lot. That's so good. When did you get in Tesla? When did you invest into it?
Yeah, so Tesla was one of the earlier positions that I invested into. Cost basis was around 230, 220, 230, and been averaging into the position.
Yeah.
Yeah.
That's incredible. Like, I think people today looking at Tesla's share price, I think it's over $1,000 today, and I think they'd be wishing that they got in at 230 a share. Like, that's incredible. Did you sell off any when it reached highs, or have you just kept?
I won't be selling my Tesla position. I would like to add more, but at a reasonable price.
At a reasonable. What price do you think is reasonable at the moment? What price?
I think it's very overvalued at the moment.
Yeah.
But waiting for a pullback, maybe some negative news, and then I'll be accumulating more.
What price would you recommend if someone wanted to get into Tesla? What would you say is a good value for them if they've got no position in Tesla and they wish to open a position in Tesla?
Well, you really invest for the long run. So if you have that cash flow that you want to invest, for the future, buying it now is reasonable, but in terms of where you are with your personal circumstances, but for me it's a bit overvalued at this current price.
Okay. Yeah. I heard around 600-700 was like real fair value if someone did a calculation on the discount cash flow, but then I've seen price targets up to $5,000, $10,000, $15,000. Some people have been saying Tesla can go to. So it's very. I also heard Tesla might be incorporated into the S&P 500. Did you hear about
that? I haven't, but there were talks on the stock price splitting and having more company shares which would reel in kind of investors at a lower sort of share price. Yeah.
Well, that could work. Yeah, if they split the stock. What's this one as well? You secondly AbbVie Incorporated.
So AbbVie is a bio kind of pharmaceutical company. It specializes in sort of healthcare, drug manufacturing, and it released a drug that helped with a lot of medical conditions like arthritis, rheumatoid arthritis, and it's just one of those really high growth, high yielding sort of long growth dividend stocks that.
So it's got a good dividend.
Yeah, and it's been there for a very long time. It used to be initially the Abbott's company.
Very good stock here. So from Stockopedia, we're on stock rank 98, momentum 98, quality 93, value, so the value's not great at its current price, $98 a share. Do you know when you got in it, AbbVie? You're up 28%.
AbbVie, I must have around,
it would have been about,
maybe around 70, 80.
Yeah, good price. Very good price. So you probably got in around here. Did you get in during the crash? Was it?
It was before.
Oh, way before.
Yeah, way before. Yeah.
So you might have gotten around 70.
Yeah.
And you're at 100 today. So up by approximately 30%. P ratio of 9. That's not high.
Yeah, it's a low P.
That's good. 10% growth rate on the revenue average. Net profit 34%. Compounded growth rate over the past few years. Good. Earnings per share increasing. Great company this actually. Operating margin increasing. So this is a great company. I'd say even potentially at the current price. So that is a fantastic current ratio. That's the short-term cash flow to the short-term debt, so it's got a 3.14. I normally look for around 2 or over, so this is a 3.1, which is fantastic. Really good. That's a really good company. I'd potentially add to that if it was maybe at a slightly better price, but still even at that price it's possible. Right. Apple, of course we know about Apple, so
yeah.
When did you invest into Apple?
So Apple was one of the very first ones as well, so I've held Apple for a very long time.
Yeah.
And obviously using Apple products, you know, MacBooks and
Yeah.
you know, iPads and iPhones.
Yeah.
They're really kind of diversifying into different areas of AI. They're making their own semiconductor, you know, their own microchips as well. So they're a company that is there for the long run.
Yeah.
You know, they're not going to fail.
Yeah. Buffett loves Apple as well. His only tech company has got Apple. I've got a stake in Apple as well. I wish I had a larger stake, but it's just getting it at the right price. Obviously, we know quality 97, momentum 98, value. I find with all the great companies, getting them at a good price is always difficult. Apple, but I'd say because of Apple's size, like even looking at its revenue, I'd say it's a little bit of a slow grower now, as Peter Lynch would say, because it's at 7% growth. Operating profits are still steady, but it's not going to be growing at the same pace as a smaller business. I don't believe so. Well, looking at the numbers here, just because of its sheer size, it's $1 trillion market cap now, isn't it?
Yeah.
Its sheer size, it's going to make it hard to continue growing. Like, you won't lose money in Apple, but you won't see like major growth. I don't believe so. I think you might get maybe 10-20%, hopefully.
Google, you know, Google through their large Google Analytics, their database, their YouTube is all part of Google.
I did a full stock analysis on Google, so you can check that out below.
Disney position, which is Walt Disney, very diversified in their, you know, their theme parks, their merchandise, their kind of cruises as well, which are kind of on the slump at the moment.
Yeah, Disney's a great one.
And their film production as well. So they're a big
Disney Plus as well, big competitor for Netflix. Yeah. What stocks did you buy during this latest crash?
I've been quite, you know, quite specific with my allocation. So I would sort of dollar cost average on any opportunities that I saw were really undervalued. I know the travel sector and the real estate sector, so I've been averaging in some of my real estate positions as well. Yeah. So going down the route of more realty income.
Realty income. Yeah. So is that REIT? Is that
REIT? Yeah, it's a real estate.
What do you know what that pays approximately, or?
So with real estate investment trusts, they have to pay out 90% of their kind of income, you know, back to shareholders. So and they pay a monthly dividend as well. So.
So 4.6% dividend, projected to rise to nearly 5% by 2021. So
a company that isn't going anywhere. They're there for the long.
Yeah, no, that's interesting. That's real interesting.
Wynn Resorts is in the casino area, so it's you know, at the moment is very much down with the you know, the coronavirus and the lockdowns. You know, they are opening parts of Vegas up and Macau, so you know, the casino sector, the gambling sector will hopefully eventually get back on the rise, and they own sort of hotel chains as well. And they're
Nice. And Boeing, you took the risk on Boeing. You decided to invest in them.
Yeah. So Boeing's only a very small position of mine. You know, invested in them due to their diversification in the aircraft sector and the aerospace as well. And they're just a big company that provides, you know, manufacturing for, you know, the airplane sector essentially. So
they've got a duopoly, haven't they, with Airbus? So they're really the only two plane manufacturers.
Airbus and even they've got links with the military as well. So
McDonald's.
McDonald's is is been there for years and years and years. Through Ray Kroc.
Ray Kroc.
Having that
great
that
film.
vision.
Have you seen the film about it?
I have.
Yeah, that's great. I love that film.
Yeah. So I would love to add more McDonald's shares, but at these levels, it seems quite overvalued in my opinion.
Did you invest McDonald's prior to the crash or during the crash?
I believe during the crash.
During the crash, you invested in.
During the crash, when
good time to get in. So Ray, do you have any tips for anyone who is starting their stock investing journey today?
Yeah. So tips is the best tip and advice I can give is starting off very young. If you've got capital left over, saving that capital and investing that is far better than leaving that capital, stashed into the bank, producing a very low interest. Is better well off invested in a company that is producing those cash flows as well. So starting off very young is what I would say. One. The younger you can invest, the better you've got. The
earlier you start,
that time on your side. Yeah.
They say there's an old proverb and it says the best time to plant a tree is 10 years ago because then it will be grown today. But the second best time to plant that tree is today. So if you haven't got started yet or you're thinking I'm too old, just start today because the earlier you start, the earlier you get used to the process and good deals, you can spot good companies and then you can continue from there. But yeah, I think we've covered everything.
Yeah. Thanks
for joining us, Ray.
You're welcome.
Yeah,
you're welcome.
On Motivation to Invest.
Thanks for having me.
Yeah. And if you guys want to see Ray more on this channel, comment below and I'll have Ray on more. Maybe we'll do like a Sunday stock talk. If people want to see that, let me know in the comments below. And you can find Ray. Where can people find you?
You can find me following my medical business at My Sports Injury. My Twitter is RAYY_HO.
Nice. And if you guys enjoyed this video, you found it informative or inspiring, please give it a big thumbs up and subscribe if you haven't so already. And I'll see you guys on the next video.